What's up, YouTube? We're going to be talking about getting started in the stock market and the first initial steps that you need to take to get there and hopefully start building your portfolio and making some money in the long run. I want to preface this with a couple things. I'm not a financial advisor. I'm just a guy on YouTube. You can take my advice. You cannot take my advice, but these are going to be very basic things that you should do getting started in the stock market just to get your feet wet a little bit, and then hopefully we could scale it from there. And I needed to make this video because I hope to make a lot more elaborate videos on the stock market in this channel going forward. But we need to get the ground basis of getting started and get everybody on board before we get into that other stuff, alright? So let's get into it. The first thing you need to do is have some money on hand that you are willing to put into the market. Now, if you are completely broke, you can't possibly get involved with the stock market. You have to have some kind of money to put in, whether that's $10, whether that's 50, 100. Let's just say for this video, $100. That gives you a little bit of versatility. I feel like most people could afford to lose $100 if they mess up, or you could grow $100 faster than you'd be able to grow $5 or $10, okay? So, let's say you have $100. The next step, once you have that money available, is to pick your brokerage that you want to go through. There's a lot of apps on there on the App Store that you could choose from to get started on the stock market. The one I personally use is Robinhood. If you use my link in the description, you get a free stock to start and I get a free stock. They are not sponsoring this video, but I feel like that's a pretty good deal for you considering that you'll get a little buffer there, and that stock could be valued a lot more money than you may think. So worst case scenario, it's a couple dollars of basically free money for you just by signing up and getting started. So that's a win right there. And best case scenario, you actually get a really good stock that hopefully keeps growing for you and you don't even have to use your $100 for it. So there you go. So if that's interesting to you, go ahead in the description, sign up for Robinhood, and let me know what free stock you get. So once you pick your brokerage, you can either have Robinhood. There's also Webull out there that has another free stock promotion. But I think Webull's a lot harder to use for beginners in the stock market. That's a more technical looking app. Robinhood is very bare bones in its appearance, which I think will help a lot of you guys out if you want to use that. There's also M1 Finance, which is good. I would have said use M1 Finance over Robinhood for intermediate level investors because they had fractional shares before Robinhood, but Robinhood recently added fractional shares, which is very important. So because of that, you can pretty much go either way. M1 Finance is great too, and there's a whole bunch of other ones. But those are free platforms for you if you wanted to use those. If you want to go through like Fidelity or whatever, or other investing firms that you may be more name aware of, those could cause you to have fees on your transactions. And if you're just getting started, I don't recommend you use those. Just because who would want to use $100 on the stock market and pay a $5 fee? Doesn't make a lot of sense, right? But once you gain experience and start scaling your portfolio and you want to switch over to one of those other more recognizable historical firms, by all means go ahead and do that. And I'm not telling you not to by any means. But if you want zero fees on your transactions, go ahead and use one of these apps. M1 Finance, Robinhood, Webull, all decent choices. I'll put my Webull link in the description too if you want to do that. But I honestly recommend you do Robinhood. So with that being said, once you pick your brokerage, you got to sign up for the account. It's super easy. It's just like making a bank account, and it probably will take you about 10 minutes. And you got to put your SSN in there. So if you don't feel like doing that for whatever reason, I've had people turn me down because of that when I put out my link and stuff. It's just the way it is. You're owning government property, these big businesses. This is pretty serious stuff that you're getting into. So if you're actually wanting to get into it, you have to put in your SSN, guys, and link your bank account. So it's just the way it is. It's federally insured. I know Robinhood is up to $250,000. So do what you gotta do. Anyway, now you gotta figure out your strategy once you're on this app and platform. So let's say you're on Robinhood, right? You have your $100 deposited. You link your bank account. They give you the money to spend. So say I deposited from my bank account $100 into Robinhood. They let you use that money, guys, before the transaction actually settles. And if it doesn't go through, then your account is in bad terms, basically. So make sure you have the money in your bank account. Just deposit it over and you could get trading right away without having to wait the 5 days or whatever for the transaction to settle, which is huge. So now we got to figure out your investing strategy. What kind of investor do you want to be? And when you're making your account, the app will ask you what you plan on doing as well. So it's good to be cognizant about this. So you have a few options. You can day trade, you can hold for your lifetime basically, or you can be a short, long-term, kind of like a couple years type guy. That's what I want to do, honestly, because especially in the current world, things are ever changing. Nothing's set in stone. So it's good to have a good stock pick for like 1 to 5 years. You want to, in my opinion, hold a stock for a year just because of the tax advantages that come with that. It might not apply as much tax-wise to you if you don't make any money. Like, for example, if you're like an 18-year-old student getting started, that's just one example. But if you have a 40-hour-a-week job, you're probably going to want to hold stocks for a year just so you don't get taxed more on them, because that cuts into the money you make, guys, at the end of the day. So 1 year, you get tax advantages, and from there you can do basically whatever you want based on how the stock's going. But if you see a bad outlook on a stock that you initially put your money into after 6 months, by all means, make your money if you're up on it and just get out of that and put your money into something else. So you just got to read it and get some experience on that end, but that is something to know, is that less taxes, 1 year more, long-term capital gains. All right, that's what I try to do. Anyway, so those are your strategies you could choose, and based on your strategy, you are going to pick stocks kind of around that. So if you're a super long-term guy and you're not going for a lot of growth, you may choose like an index fund or something very safe with historical growth rates that could get you there. However, if you're going for more growth and you might be in the 2 to 4 year range, you might want to go for an individual company that could pay a small dividend, could not, but has a lot of revenue growth potential. And I will go into a whole other video of how to evaluate a company down the line. But if you're going for more growth to outperform the market, because that is your goal if you are picking individual stocks, is to outperform the market, which historically is around 7% growth per year. You got to choose stocks that have massive potential. Massive. So you got to be able to find those if that's what you're going for. If you're day trading, you are basically riding out news, riding out earnings reports, and you're kind of speculating, honestly. You're waiting for a huge jump in stocks. It's a lot riskier, and you're also paying more taxes. So that's personally what I don't do, and I don't recommend doing that to a lot of people, especially if you're just getting started and have no idea what you're doing. So what I really recommend is, with your first $100, you can put it in something safe. There's certain index funds, ETFs on Robinhood that are like $78 right now. You can get the total world stock for like $78. You can get that, a share of that. That's pretty safe for you. That should grow if you're really scared of the risk. There's also certain companies that are very historically great at raising dividends, which is passive income for you by just owning it. So if you just want to own a company for a year and make a little bit of money, the way to go could be a company like Coca-Cola. That's a great beginner stock. Historically, they have raised their dividend for years upon years, decades, actually. So that could be one for you. And their stock price on that should actually grow a little bit as well over a year. So that could be a great investment for you. You could actually literally make 4% or more on your money just like that, pretty safely. Aside from that, you could go for high growth companies. So these are ones that tend to have less of a dividend payment, but their scaling is just huge. So an example of this could be something like Uber, for example, which I don't own Uber personally at the moment. It's on my watch list, but say Uber was like the next big thing, and you really looked at their statements, you saw Uber could grow 3x, 4x in the next couple years on its current price, which is around $30 a share at the time of this video. So it's going to be interesting to look back at this in a year and see where it's at. But anyway, you can look at Uber and you could just say, I really see the potential in this, so I'm gonna get 3 shares of Uber with my $100, and if all of those eventually grow for you by at least 2x, you are vastly outperforming the market. So if you see Uber shares getting to $60 or more in the next couple of years, and you really see that company expanding, you have a personal connection to that company, maybe you use their products, you got to understand the business as well a little bit if you're doing this, then that could be one that you want to choose. So there's a ton of stuff you can pick from here, and I'm not an expert on like penny stocks or like day trading, so I can't give you personal picks for that. But what I can say is there's people on YouTube that could help you with that if you're really just looking to put all your faith in somebody and not do the research for yourself. By all means, go for it. But if you're looking for something a little safer when you're just getting started, just so you can get the ball rolling a little bit in the next year or two as you continue to influx money into this account, then you can go for blue chips, stocks like coca-cola, things like that, that actually will pay you the dividend no matter what and have historically been good about that. Johnson & Johnson's a good one. Trying to think. You can go for higher dividend yields like AT&T. You can go for banks that are pretty safe. Bank of America, actually, at the time of this video, Warren Buffett just purchased $1.7, I believe, billion more of their stocks. So if Buffett's on it and he's adding his holding in that company, then that could be a good idea for you to get. You could probably get almost 4 shares of that with your $100 at this point of this video. And I bought some myself the other day just to lower my cost average on it, and it worked great. I've already made a couple bucks on it just by doing that, so could be a good hold for Bank of America stock right now, and the dividend yield for that at the moment is over 3%, but Coca-Cola's is historically more in tune with raising it every year as well, so it really depends on what you're looking for there. But you could go, let's see, I'm trying to think of a good example for you. You could go index fund, $78. And if you had a couple more dollars than $100, guys, you could do one of that total world stock index, or ETF, excuse me, on Robinhood. You can get one of those, and then you can get one of the Coca-Colas or one of the Bank of Americas. You're in pretty good shape right there. That's pretty safe investments. I'd be pretty shocked if you lost money on those. And remember, you only lose money when you sell it for less than what you got it for. Just because the price is below what you got it for doesn't mean you should sell it. If you bought a house for $100,000 the other day and then you sold that house, why would you sell that house for $90,000 3 weeks later? That makes no sense, guys. Why would you do that? Hold it out, trust the company, trust your research, and trust the growth of your portfolio. If you're making good picks, it's going to work out for you in the long run. And I recommend keeping that mindset like a year. You might want to just not even look at it, honestly, once you get it, because that might trigger something for you. But if you have that long-term mindset of growing a portfolio and building this into something that could really make you passive income over time, then you got to first like harness your energy to the fact that you won't actually like sell everything immediately. You got to be able to hold it and go with the market. There's going to be ups in the market. There's going to be downs in the market. They're going to test you, and that's the biggest thing about getting into the market as a beginner is you have to be able to like be emotionally stable with this and sturdy, really, because the market does fluctuate, especially here in 2020 with everything going on. My God, it's going to go up, it's going to go down, and you got to be able to feel the emotions when it does both, and then make your decisions based around that. And getting that experience is invaluable. So I hope you guys enjoyed this video. If you have any questions for me at all, feel free to hit me up. I have my social media link in the description below. I also have that Webull and Robinhood link in the description below as well, if that interests you and you want to get started. Like I said, great buffer to get that free stock for Robinhood, especially once you link your bank account and you get that free stock. And even if you mess up a little bit, that's a good buffer for you, because then say your stock goes down a little bit, you got that free stock to cover that. So it's kind of a win-win if you really think about it. You get to get started in the market and you get free money for a 10-minute sign up. Can't lose, right? So if you guys enjoyed that, look in the description. Feel free to watch more of my videos. We're going to keep coming out with good content in the future, all right? So I'll catch you guys later.